As we do each and every Tuesday at 3:30, folks, we're going to jump over to our man Tim Ord. You can reach Tim at his website, ord-oracle.com. And don't forget to check out, folks, right at the front page of TFNN, under the Services tab, 2 outstanding webinars, 6 secret ratios every trader should know. We talk about some of those ratios on this program with Tim. And then the secret science of market tops, how to identify market tops. Check those out, folks, at the front page of TFNN under that Services tab. Tim Ord, good afternoon.
Good afternoon. Thanks for having me on again. And let's take a look. It's actually kind of a boring market. It's just kind of a more patience here. This is summer. This is the weakest quarter of the year. Sometimes this dullness, they'll slap you in the face with a decline. But I don't think that's starting here. I think there's one coming in October, or maybe September. But right now, I'm still bullish. The first chart we're looking at is daily SPY, and this is outlined this pink area right here, from here to here, basically from 640 to 635. Kind of updated this chart from Tuesday, and we had a bunch of ticks and trend reads. I listed them here, where they occurred at what day it was, and basically that's the reason why I shaded this all pink. That's the area where all the panic happened at. And so once you get panic in an area, if you go back into it, you get panic again. And that's starting to happen here. We did get long, actually a day too quick again, but I guess this would be Tuesday, we had a trend close of 1.28 and 132 downtick readings. That shows panic. Panic normally forms near lows. Sometimes it can be a couple of days early, like this case here. Market pushed down into the panic area, and you notice it just went down to the bottom area and kind of came back. Now we're kind of neutral in here, kind of below yesterday's close, but still above yesterday's, or above yesterday's close, but below yesterday's open. So we're kind of just doing nothing. And I did this earlier in the day, but volume's not going to be anywhere near yesterday's volume. So we're probably at a low right here, right now. The reason I say that is because this next chart, this is the SPX tilt ratio. Bottom window is the SPX. And normally the SPX tilt ratio leads. It's common for the SPX tilt ratio to lead the SPY. This is earlier in the day. We're actually a little bit higher, this SPX tilt ratio. I checked about, 5-10 minutes ago. It's around 74 right now, so it's kind of unchanged from the open. And if you notice, this is earlier in the day again. We're way below yesterday's open, where the SPX tilt ratio is pretty much above yesterday's open. So that suggests probably tomorrow is going to be an up day, because the SPX tilt ratio is higher than yesterday's close, where the SPX is below yesterday's close. So that's a minor divergence, but a lot of times that's how that works. So I think we're in a support area. The SPX tilt ratio is getting a bullish, short-term bullish sign, I guess you might say. So this quiet market that kind of just fumbled down here over the last couple of days. I think we're off a 1.5% maybe for the week, or percent for the week, nothing much. But this is there is a support area currently right in it right now. And so we should probably see a rally out of this place. If it doesn't start tomorrow, it's probably going to start next week. On a bigger time frame, this is the daily SPY again. This is the bottom window. This looks a little bit bigger view of what the market may do. A lot of times you get divergence. Well, in a nutshell, if the SPX VIX ratio is going down while the SP is going up, that's all these pink areas. That's usually a bearish divergence. And so far, we really haven't had anything yet forecasting a top in the VIX, even though the VIX is backed off here. The last high did make a higher high, as the SP's made a higher high. And that's usually a good indication, even though you get some consolidations. we're not seeing any high of any consequence. So if the next rally does come, like I'm predicting, and we hit a higher high, and this SPX, the SPY VIX ratio fails to hit a higher high, that would be a warning sign. And so far that hasn't happened. So I'm kind of got along a little bit too quick. But anyhow, we're still looking at a low. We're probably looking to higher highs in the SPs starting soon. It's possible it could start tomorrow. Then I'll be watching how that SPX or the SPY VIX ratio makes a higher high or not. So that's kind of where I'm at. It's kind of doldrums. There's nothing real panicky going in the market. Everybody's bored here, along with me. But the next rally,
Tim, for something when you look at an event, maybe you're looking for tomorrow. Excuse me. Do you ever look on the horizon if there might be an event that could cause kind of some type of change? And I bring it up with Chairman Powell being in Jackson Hole tomorrow, and you said that, and I said, oh well, maybe you get some acceleration there. Do you ever let that come into your mind when you're making those types of analysis?
No, actually, the market predicts the news. It seems everybody else predicts. Well, the reason why the market went down today because Powell is going to raise interest rates, or whatever. That's already, the people in the know already know what's going to go on, and they're leading the market, and that's how I view that. So.
Nice.
Whatever Powell is going to do tomorrow, or the interest rate is going to do tomorrow, that's already factored into the market.
Price and volume, right? Getting in. Yeah, totally. The charts.
Price and volume. So the market predicts, anyhow, the smart money's already made their decision, I'll put it that way.
Sure.
And whatever is going on, and they got all the money. So that's how I view the market. Smart money buys at lows, sells at highs, and they kind of know, because they're, in my opinion, connected to whatever influence the market may be looking at. So that's how I don't think of any major, at least not yet, anything. I do think a big decline, or a worthwhile decline, I'll put it that way, is coming. But I think that may show up in September, October. And that may set the stage for the rally, the end of year rally that usually come in sometime in September, October. So I think this next rally is kind of a fool's rally. It may hit new highs, but not too much higher than the previous highs, maybe 3-4% higher is all. So
okay,
we got the gold market going here. So
hang right there,
talk about
folks.
that
We're going to come back. We'll finish up this discussion with Tim. We're going to talk some gold as well. We get the S&Ps off by 26, and we got the gold. We'll jump over to gold right now, even with a little dollar strength. Gold holding up well, only off $3, $33.85. We're coming back with Tim. Don't go away, folks. Welcome back, folks. Markets in the red, S&P's in the red, NASDAQ, Dow, Russell barely positive by 1 point right now. We're talking to our man Tim Ward, and yeah, let's keep going. Tim, where do we go from here?
All right, this is the daily GDX daily ratio. So it measures the velocity of that ratio up and down. And I got the red lines going back to April of 2000 would be April of 2019. And so it's quite a few years. It didn't happen very often. But the last time we got a signal was July of 2024. Well, actually, there's another one right there. But anyhow, the RSI, once it gets above 70 on this ratio, it's gone up too fast, too quick, and needs to fall back down. And so anything above 68 bearish. I think Tuesday it was up around 74. We're at 70.57 right now. But that's a warning sign on a short-term basis. This is a daily GDX. So RSI above 70, that's a daily. Going next one here is this is the inflation. This is Martin Ping's ratio. It's a weekly inflation-deflation ratio. It's Martin Ping produced this, I don't know, a number of years ago, and I put an RSI to it. So this is a weekly time frame. So you got a daily, a bearish sign. Now this is a weekly. So it's the RSI on the inflation-deflation ratio, and we're at 68 and change. I think it got up around 73 last week or maybe Tuesday. But anyhow, it did get above 70. Now it's starting to back off a little bit. These are all the signals going back to 2016. And all of them picked out at least a even here we picked out at least a multi-week consolidation. So we're at that way too. So it's I know GDX is up today, and here's the monthly. So you got the weekly, or you got the daily, the weekly, and here's the monthly. We keep showing this. This one's actually a little higher. I think it was around 74 on Tuesday. We're at 76.38, and we're also against the previous high. And so we're kind of an exhaustion move. And there's another momentum bottom window here. Is full of stochastics. So you can see how that goes. We're also full of stochastics up above 80. We're at 87.91 right now. So any weakness at all will turn these RSIs and this stochastics down. Not looking for anything huge, but I think we get back to this high, which is basically around 200. We're at 234 right now, so it's about a 15% decline. And I think the market's due for consolidation here. We had a heck of a run. I think this is just trapping all the shorts right now. A lot of times the market consolidates, speeds up, tries to knock out all the stops, whatever, and I think that's what's going. I don't think it's going to continue, especially when you get the daily, the weekly, and the monthly all in bearish territory, which is kind of rare. So we're sitting on a period of time, I guess you might say, that's probably the pinnacle of a high in this vicinity. I did get short at 55. That was, I thought we'd turn around then. We're back up, higher than that right now. But I don't see a reason why to cover that short. I'll put it that way. On the bigger
what's
time
cool
frame,
about Sean, what's cool about that line too, Tim, is that that's right where it completed kind of a one-to-one A to B, C to D. If you go back in February 2024, the XAU, you do that big move in 2024, you pull back, and then you do that same exact move. It kind of brings you to that consolidation area that we were at between like 200 and 210 for the last like 3 or 4 months. So that's kind of cool as well. If you're looking for a test, that's right where it just completed a one-to-one off of starting at $100 at the beginning of last year as well.
Yeah, actually, me and your dad were talking about, I forgot all about. We were talking about some of these ratios we're looking at. Well, this should be about 100% move, and I forget what we were talking about that, but that was probably last March of a couple of years ago, because we were back down in this vicinity in here, and I was looking for a low, and nothing was really going on there, and finally it took off and went. So me and your dad helped pick that move out. I don't know if you remember or not.
Oh, I remember, man, and I was listening. It was quite a call, and
everybody
quite
was
a run.
Everybody was kind of saying, well, this is kind of fairyland. And that's pretty much what has to happen. If everybody believes you, then a lot of times it doesn't happen. So now this is kind of the reverse of that. And now I'm calling for a high, but not a high of any consequence. We picked that out. We were, and it was kind of dead. Is this signal going to fail? Well, it didn't. So, but that's how this market works. Anyhow, it is what it is. But here's a chart I kind of want to say. This looks at the really big picture. The chart goes back to 1980. Well, it's actually, the statistics probably start in 84. But anyhow, this is a huge chart. Okay. The middle chart is the monthly XAU to gold. And so it measures how expensive gold stocks are to gold. When the ratio is really high, stocks are expensive compared to gold. When it's really low, stocks are cheap compared to gold. So it does pretty well. This chart goes back to 84, but this pink area, it basically bounced in the trading range from 1984. It looks like about 2008, between 0.17 to looks like a 0.33, or call it 0.35. It bounced around that range. It got above 0.35. Things are too expensive, which is basically right there, and get down below 0.175, which is right there, which is that low right there. And it just bounced around. And so you always bought cheap. Well, things changed back in 2008. You started breaking down to new lows. And now we've created a trading range from basically 2014 to the current time frame. We stayed basically between 0.05 to 0.07, give or take. And we're in that trading range for 10 years now. And
Wow.
so, yeah, that's a long time. It seemed like, I've marked other times as smaller ranges where this trading range lasted 2 years. This one kind of lasted 4 years. This one lasted 6 years, kind of banged around. This one's a couple of years in here.
And I just looked at the numbers, Tim, because it's the gold contract in 2008, it was pushing like 1,000, and the XAU was at 200. And that's where we just said maybe the XAU would pull back. It's only at 235. We were at 225 yesterday. The XAU, folks, was at 200 in 2008 when gold was only at 1,000. Pretty remarkable, man. Great, yeah.
Yeah, so what's going to happen? So we go 10 years virtually in a narrow trading range. So either we're going to break up or we're going to break down, just like previous times. This marked a high zone, this marked a low zone. This actually marked a high zone because it broke down. This also marked a high zone because we broke down from there. And now we got a sideways trading range for 10 years. So are we going to break down again? Is that possible? I don't think so, but the market will do what it does. But I think we broke this trend line, which me and your dad talked about, and we finally got above it here. And so are we turning back up again? At my view, I think we are. So,
pretty remarkable, the XAU. You talked about it on Tuesday, and it kind of not blew my mind. But yeah, crazy. We're right back up to those highs from ages ago. Gold so much higher than metal. Yep. Tim, great information as always, man. We appreciate it. Have a great couple days. Have a great weekend. We look forward to talking to you on Tuesday as always.
All right. Thank you.
Take care. Folks, check them out. Orid-oracle.com and those webinars at TFNN under the services tab. We'll be right back, folks.